Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chuani and good evening. Today is Wednesday, October 29th. I'm analyst Jiang Jida. If you haven't yet, please like, subscribe, and share. If you have complaints or questions, leave a comment. If I can't answer today, I'll address it in tomorrow's class. As usual, I'll answer questions from students asked yesterday, especially those related to, in the next 2 days, the most important thing is that 5 out of the 7 major tech giants will be releasing their earnings reports one after another. So, of course, everyone will have a lot of questions and concerns about these 5 giants' earnings. Over the next couple of days, we'll keep providing updates and previews for you, including forecasts from Bloomberg and the market regarding the revenue and profits of these 5 giants. We'll be comparing the actual numbers to the forecasts, so there's no need to worry. In the next 2 days, companies like Facebook, Google, Amazon, Apple, and even Microsoft will all be releasing their earnings reports. We'll walk you through each one and track them together. Hello, everyone. Good evening. May and Sure. Good evening to you both. Also, good night to my Daisy. Faye, it's been a while since we've heard your fast-paced speech. Good night to Feiyu and also to SY Lu. Good evening, good evening. First, let's take a look at today's investment highlights. Actually, after today, what comes next? Tomorrow arrives, right? And what does tomorrow bring? Tomorrow is very important because in the early hours of tomorrow, the FOMC will announce its interest rate decision. The whole market is focused on this, especially since there are only a few interest rate meetings left for the rest of the year, particularly as we approach the end of the year. Everyone is concerned or even worried about this October meeting, or whether there's a chance for a 25 basis point rate cut in December. This is why the interest rate decision meeting at 2 a.m. tomorrow is such a major focus. Besides that, there are a few more updates I want to share with everyone today. First, the US-Japan negotiations are going quite well. The pressure of closed-door competition. Regarding the negotiations between the US and Japan, we can see that yesterday Trump met with Prime Minister Sanai Takaichi. In fact, during this Asia trip, whether Trump is visiting Southeast Asian countries or the various countries in Northeast Asia, or even possibly meeting with Xi Jinping at the end of October during the APEC summit. So as these negotiations continue, there have been a lot of positive developments in Southeast Asia, especially regarding things like rare earths and other key or defense-related collaborations. As for Japan and South Korea, today there are also many related cooperation agreements being negotiated with Japan, and the same goes for South Korea. So today, I'll be sharing some additional information with everyone. Why did the negotiations between Japan and the United States end with everyone smiling this time? Of course, there are also ways to help boost the upcoming APEC summit at the end of October. In addition, the pressure from the government shutdown continues, and the competition surrounding the shutdown has now entered its 4th week. It's possible that this could break the record set by Trump in 2018, when the government was shut down for 35 days. Of course, this kind of record isn't necessarily a good thing, and although in the short term, the overall impact on the US economy isn't that significant, to be honest. But today is a bit special. Today, in the US, some of the states mainly governed by the Democratic Party have filed lawsuits against the federal government. What exactly are these lawsuits about, and why were they filed? As for the government shutdown, whether it can end early will have a big impact, and we'll be following up on that for you in a bit. In addition, on the industry front, let's take a look at the most important event, the NVIDIA GTC conference. NVIDIA's GTC conference lasts for 3 days, and in today's session, they covered a lot of topics, including the development of AI, 6G communications, as well as quantum computing, robotics, and many other themes. They also mentioned a lot of companies. NVIDIA has a huge number of partners. Whether they can lead the entire AI industry to flourish is a major highlight and something to watch for. On another note, we need to pay attention to Microsoft, because Microsoft is set to release its latest 3rd quarter financial report tomorrow. As we've mentioned before, besides Microsoft, companies like Google and Meta will also be announcing their results tomorrow. In addition to Microsoft's earnings release, it's worth noting that Microsoft has made significant investments in a major company, OpenAI. The whole complicated relationship between them seems to have reached a conclusion as of today. What exactly did they discuss? Why is this deal considered a tenfold win for Microsoft? Of course, it also has a supportive effect on Microsoft's stock price. So we'll break all of this down for everyone in a moment. Good evening, everyone. Hello, Mingming. Hello, and also Brother Yuluin. Who is this? GALX4. Is Palace a new student? Or maybe it's just the Google account. I can't really tell who it was before. Anyway, good evening to Amy Lee. and also to Naya 35858, 35858. That's easy to remember. Good evening, everyone. Okay, so before we get into the main tutorial, let's first take a look at something. At 10 o'clock tonight, there's an economic data release. This is the US pending home sales month-over-month data for September. The previous value was 4%, and the forecast is 1%. This data is seen as neutral for its impact on the US stock market, so the market reaction should be mild. It's not expected to have much effect, so just note and be aware of this data. Of course, let's answer some questions. Yesterday, someone asked about how to view Google's earnings report. Also, I think Caesar asked about Qualcomm's stock price. Yesterday, we talked about Qualcomm on the show. Qualcomm, didn't they say they're developing the AI 200 and AI 250 chips? In the short term, their stock price surged 20% intraday, right? Some of you might have bought in at the peak when it surged over 20%. So what should you do now? Well, as we mentioned yesterday, as long as the neckline and the monthly and seasonal moving averages haven't been broken, there's no need to worry too much. But whether Qualcomm can continue to hit new highs in the future doesn't just depend on things like AI 200 or AI 2250 development. It's not just about that. You really have to look at which companies are actually using it and in which industries it's being applied. Whether it can thrive like AMD and push its market share up to 5% or even above 60%. That's what would really give Qualcomm's stock price a significant boost. Otherwise, in the short term, these so-called hot topics are just like fireworks. They flare up and then fade away. Fireworks just fizzle out in a flash, right? Just like the fireworks on National Day, they're gone in a minute or two. After the fireworks are over, what do you go back to? In normal times, you have to look at things like their financial reports and fundamentals and see whether their AI 200 and AI 250 are really developing as well as they expected. Or is it actually just a hype-driven story, and the situation could change a lot later on? So I just wanted to briefly add this point for everyone. As for Google's earnings report, Google is performing pretty well at the moment. Tomorrow, I'll also give everyone a preview of their earnings, including the current forecast, Bloomberg's projections, and some market conditions. Then, I'll evaluate their revenue growth, profitability, and also share some information about Google's future capital expenditures and other updates. I'll provide more details for everyone tomorrow. Of course, tomorrow's update won't just cover Google. I'll also give an early preview of the earnings reports for Meta and Microsoft. These three stocks are all scheduled to release their earnings after the market closes tomorrow. Not today, but after tomorrow's close. So, this will have a relative impact on the market. These will have a bigger impact on the market or indexes, so tomorrow we'll focus more on these three companies. We won't cover them today. Who will we talk about today? Today, we'll cover the wild card, Boeing, because Boeing's earnings report is out tonight. Whether Boeing's earnings are good or bad is important, and we'll keep an eye on that too. Alright, aside from the data and earnings reports, let's also take a look at the positions of relevant officials and investment institutions. First, good evening to Melissa and everyone else. Wells Fargo and UBS have been continuously raising their target prices for the S&P. So, the expectation is the stock market is expected to rise by year-end. Wells Fargo estimates the S&P could reach 7,100 points, while UBS projects 7,300 points by year-end and next June. For these investment institutions' forecasts, bullish or bearish, I suggest everyone view them neutrally. Well, why take a neutral view? Because if you recall, we talked about this on our evening show, around June and July of this year, when the index was fluctuating quite a bit. At that time, some institutions predicted the S&P would drop as low as 5,000 points, while others thought it could rise to 7,000 points by the end of the year. On average, the forecast was about 6,500 points. Alright, tomorrow it could clear 500 points. I've said before, when you look at investment institutions' views, they have a habit. When the index gets stronger, they keep raising targets. But when it gets weaker, what do? They kick you when you're down, constantly lowering their targets, slashing price estimates. So when you look at these target prices, honestly, they're not really, I should say their importance, in my opinion, isn't actually that high. But they can be used as a reference, sure, as a reference. What we really need to pay attention to is the reason why they raise or lower the target price. I think those reasons are much more important than the index or the price level they mention, because they need to back it up. For example, if today I see 7,300 or 7,100, I need to know why. Is it because of AI development? Or because Trump's tariff case has reached a certain stage? Or is there some other reason? You have to look at their reasoning. If that reasoning is credible, then of course the index will move toward their target. But if they just give a number without explaining the reason, if they just say, because international developments look good, by year-end they see it at 7,100 or 7,300. Arguments like that you can just look at and move on. Right now, all investment institutions are raising their index estimates higher and higher, whether for the Taiwan or US stock market. It's the same, no matter which Taiwanese brokerage you check. Foreign brokerage firms keep raising their estimates as the index hits new highs. How long will this continue? They'll keep increasing estimates until the market reverses or a bubble bursts. Then you'll see them adjust target prices, revising them up or down. So those target price changes are just for reference, but the reasons can help you understand the general idea. Also, the US government has now been shut down for 4 weeks. Now, just as this is happening, 25 states governed by the Democratic Party have started to sue the government. Why are they suing? The reason is that they're demanding the government quickly use the so-called emergency reserve funds. Why? Because there's currently a bill, or rather a program, called the Supplemental Nutrition Assistance Program. Basically, if you don't have food, you can't eat. This is also for low and middle-income people who might not even have enough to eat 3 meals a day. So what is this program, the Supplemental Nutrition Assistance Program, about? It aims to help nearly 42 million people across the United States, which is about 1/8 of the total population. That's a huge number of people. They are probably living just below the poverty line, so it's not easy for them to have enough to eat for 3 meals a day. At this point, what does this program do? This program gives them money, allowing them to use this subsidy to buy daily necessities and the food they need at designated stores. So that's what the subsidy is for. Now, why did these 25 states file a lawsuit against the US federal government over this subsidy? It's because the funds for the subsidy will run out by the end of October this year. Once the money runs out at the end of October, what happens? Then these 24 million people will be left struggling everywhere. That's the issue here. This issue will affect what, Just think about it. When you can't even afford enough to eat or wear, and then your subsidies get cut, who are you going to blame at that point? Who are you going to blame? You'll blame the heavens, blame the earth, right? Then you'll blame the government, companies, your parents. Basically, you'll blame everyone. You definitely won't blame yourself. When you have nothing to eat, you won't say it's because you didn't work hard enough. You won't blame yourself for not working hard. So who will you blame? You'll blame that other people. And after all that blaming, where does the focus end up? It lands on the politicians. So, for example, whether it's Democrats or Republicans, people start saying, hey, I can't get my subsidies, I can't make ends meet, I don't have enough money. It's all because of you politicians. So when it's time to vote next year, let's say these 42 million, let's say, just for argument's sake, that half of them, just half, have the right to vote. That's over 20 million people. So what about these 20 million? They'll be thinking, I can't get enough to eat or stay warm this week. Okay, that's it, I'm done. If my state is run by Democrats, I'm not voting for Democrats anymore. If my state is run by Republicans, I'm not voting for Republicans. So, to a certain extent, this kind of pressure on people's livelihoods will end up affecting the election and the polls. That's why, in 25 states, Democratic leaders are quickly making demands to the government, because you can imagine, if by the end of October this funding really does run out and there's no money left, when people can't get by anymore, they'll start going after these politicians. They'll go after these government officials. So I think this isn't just something happening in states governed by Democrats. Even states run by Republicans could face similar pressure. So when you talk about a shutdown, if the shutdown really lasts for 4 weeks, will it go into the 5th week, 6th week, or even 2 months? Honestly, I think the chances aren't great because as time goes on, there will be more and more pressure from people's daily lives. This kind of pressure will force both the Republican and Democratic parties. Whether it's in the House or the Senate, their votes or whether the budget bill can be actively passed will face significant pressure, because there's pressure from voters behind the scenes. So I think now that it's reached 4 weeks, it's hard to say for sure if it will be extended. But I don't think the chances are high because there's electoral pressure. But let's just keep an eye on it. Right now, both sides are holding their ground. Both are just waiting to see who will give in first. That's basically the idea because there's still no consensus on how much to subsidize for things like Medicaid or which level of subsidies or where to cut the budget. So the whole government's funding is at a standstill. That's the situation right now. Alright, next about ADP. ADP is a private organization, a private institution that specifically releases the ADP non-farm employment change data. This data is published by the company, this private organization called ADP. Now, when it comes to this ADP data, we often say that it's released on the Wednesday of the first week at the beginning of every month's first Wednesday of the first week. Then, on the Friday of the first week, that is, the first Friday of the month, the U.S. Department of Labor releases the official non-farm payroll numbers and the unemployment rate. So, the official release is Friday, while the private sector release is Wednesday. This means private data comes out 2 days before official numbers and can serve as a reference. However, because the government is shut down, much official data isn't available now. But private sector data is still accessible. According to data company ADP, he said that in order to help everyone better assess changes in the labor market, they plan to start releasing employment data every week starting this week. Previously, both the official and private sector data were only released once a month. It used to be released once a month, but now they're going to release it every week, The data will be released every Tuesday at 8:15. So he said that according to the data from the first week, the average employment increased by 14,000. To put it simply, each weekly release shows an average increase of 14,000 jobs. If we count 4 weeks in a month, that means you multiply 14,000 by 4 weeks, so possibly. Simply put, this is just basic arithmetic, a simple estimation of what the ADP monthly statistic might be, maybe around 55,000 or 56,000, something like that. But as for whether this data is actually helpful, we think it's pretty neutral in terms of its usefulness. It's still more useful to release that data once a month, because if you announce it every week, then each week you just look at the number of people applying for unemployment benefits and those continuing to claim unemployment benefits. Just check the numbers published by the US Department of Labor. Just look at those official weekly initial and continuing claims, that's enough. I actually think those have a bigger impact on the market. As for ADP, if it turns into a weekly release, at best it's just an extra backup data point for when the government shuts down and people need an alternative. You can use it as a reference. Let me say it again. Right now the government is shut down, so a lot of data isn't being released like CPI, PPI, PCE, and a lot of other things. Since they're not being published, including things like the non-farm payrolls and CAD, you can't see those numbers at the moment either. So what do? Everyone just has to look at data from private companies. That's why I said ADP, which is now released every week, basically just gives everyone an extra backup system for data reference. But when the day comes that the Bureau of Labor Statistics starts releasing the initial jobless claims numbers again, which one is more important? Of course, you look at the official numbers, not the weekly ADP reports. That's the general idea, you get what I mean? So right now, you can look at it, but once things return to normal, it's still the non-farm payrolls released on the first Friday of every month that matter most. Along with the unemployment rate and the weekly initial jobless claims, those data tools are still more important. So you can just take a quick look at this stuff, because in terms of importance, I think the first is the non-farm payrolls, and second is the monthly data, which are still more significant. As for the trade war part, hey, good evening to the staff members, I see you, hey, Quada, this kind of thing, I'm not sure, oh, not sure. Hey, there are 2 Mays today, I don't know which May is the one from 16. Good evening to everyone from 16. Alright, so AAA asked whether, after the financial reports come out, there will be a sell the news effect, since the prices have already gone up a lot. It's possible, yeah, it's possible. When the financial reports come out, if I still stick to what I've always said, the way things are moving now is really interesting, it's changed like this. Right now, both the index and many individual stocks are at historical highs. So when you're trading, you need to remember one thing. If the financial report comes out and it's positive news, what we call positive news is usually already expected, and this is true for any company. If it's already expected, what will happen? It will surge, it will go up, yes, it will go up. Sometimes it might even gap up right at the start. A 5% gap up, 10%, or for some companies, even more than 20%. You have to remember, on the day it gaps up after the positive news comes out, you should sell once, you should take some profits. Why? Because after that, it's likely to open high and then drop lower that same day, or in the next 2 or 3 days, it might open high and then go through some consolidation or choppy trading. After the consolidation, maybe the price will go up again, but remember, when you see this kind of positive news come out, at the very least, sell a portion. Whether you sell 1 or 2 lots, it's good to lock in some profits. What you've pocketed is truly yours. Otherwise, sometimes after all the ups and downs, you end up with nothing. Sometimes, right after the positive news pushes the price up, it immediately opens lower and drops, quickly closing with a long bearish candlestick. So when positive news comes out, it just means that the company's financial report is indeed excellent and its fundamentals are strong. But from a technical analysis or market sentiment perspective, it might not actually be a good entry point. On the contrary, you should consider doing the opposite. If you're worried the good news has already been fully priced in, you can go ahead and sell some first. But if you're asking whether, after a surge on the day of the news, the stock opens high and then drops, or if it fluctuates for a few days, whether a fundamentally strong company will suddenly turn bearish after 5 or 6 days of volatility, the answer is no, you don't need to worry about that. At most, it'll just shift into a period of consolidation. But after the consolidation, it's still possible for the stock to break to new highs again. It just needs some time, okay? It needs some time. So when it hits a new high, stick to the principle of protecting your gains. It's favorable to sell some when it breaks higher, but don't go short, okay? Don't go short because in the current market, whether it's the index, Taiwan stocks, US stocks, or individual stocks, most of them aren't in a bearish structure, nor is it a bear market. At most, you should just take some profits when prices are high, and then if there's a pullback, you can buy back in and set up your positions again. Basically, if you want to operate like this, you need to sell high and buy low. You have to know how to sell when it's high and buy when it's low. That's the only way you'll make a profit from the price difference. Okay, let's take a look at Trump. Trump and this mayor Gao Shirzao, hey, Gao Shirzao is a really unique name. Gao Shir is like Kaohsiung City, and Zhao Miao means morning seedling. Gao Shirzao Miao, this is actually a person's name. Gao Shirzao Miao, Gao Shirzao Miao. Sometimes Japanese names are really interesting. Sometimes they're just quite unique. Like before, wasn't there someone, what's his name? There was also a prime minister, was it Yoshihide Suga? Or Suga something, also a prime minister. I forget his full name. Then there's Shinzo Abe and Fumio Kishida. Anyway, their names are all quite unique. So, about this person Gao Shizhao Miao, just so everyone has a basic idea, Gao Shizhao Miao, you could say his mentor, or rather, the school or tradition he comes from, is more about who he studied under. It's not like he studied under Ip Man or anything. So who did he study under? Which school of thought does he mainly follow? Shinzo Abe is the one who was later assassinated. He studied under Shinzo Abe. Remember how Shinzo Abe had his so-called 3 arrows? As long as it was about fiscal policy or monetary easing, it was all about stimulating consumption and boosting household spending, which pushed the economy up. So Abe's 3 arrows are related to that. So Sanai Takaichi's own policy arguments and positions are pretty much in line with Abe's school of thought. So what did Sanai Takaichi and Trump sign this time? It's a framework to secure the supply of critical minerals and rare earths. It's pretty straightforward, just take note of it. Basically, both sides, meaning Japan and the US, keep talking about forming alliances, cooperating with each other economically and in terms of security. And then, why do I say this? Why do I say this? Well, the conversations between Trump and Sanai Takaichi over the past couple of days have been really cheerful and positive. That's because Trump himself is the kind of person who likes others to go along with him, to flatter him, or to have some good cooperation deals. After all, he's a businessman. So of course, when Mayor Takaichi signed that so-called US-Japan Critical Minerals or Rare Earths Cooperation Agreement with Trump, what was the purpose? It's obviously to get rid of dependence on China. That's easy to understand. Then later, he mentioned that next year, the United States will be celebrating its 250th anniversary on Independence Day. So, Japan said it would gift 250 cherry blossom trees and fireworks. In addition, he will also let Trump know that Sanai Takaichi is mainly continuing the kind of administration, the feeling, and the policies of Shinzo Abe. Now, why specifically mention Abe? Why does he want to bring up Abe in particular? Because, aside from Abe's stance of economic expansion and easing, which is generally positive for the Japanese stock market, Shinzo Abe also had a very good personal relationship with Trump. They were good friends. So, with the newly appointed Mayor Takashi, it's important for her to quickly build a connection. She might say, hey, my mentor is Shinzo Abe. Abe used to mention you often and spoke highly of you. Hearing this, how would Trump react? He would feel like, oh. He would think, oh, you care about Abe. I used to be good friends with Abe. So he would have this kind of, let's say, love me, love my dog feeling. That's why, if you look at their conversations and every photo of them together, they're always smiling. It's that kind of vibe. Besides that, Mayor Takashi did something else, and I think this one is a bit over the top. She said, she expressed her intention to nominate Trump for the Nobel Peace Prize, because she felt that Trump's efforts for the security of this region were commendable. Otherwise, look at what's happening in Ukraine, Russia, Israel, Hamas, Iran, and so on. This area is a mess. She said she wanted to nominate Trump for the Nobel Peace Prize. Of course, Trump was very happy about this suggestion, since he didn't get the Peace Prize this time. Trump has said himself that he really wants to win it, really wants it, but the problem is the Nobel Committee just won't give it to him. Of course, maybe there are some political considerations behind it. We don't really know. There's nothing that can be done about it, so at this point, Mayor Gao didn't actually say, I'm willing to nominate Trump for the Peace Prize. Of course, Trump was still very happy, really happy, happy as happy. All we can say is that Japan and the United States are moving toward a more positive direction of cooperation, which is great. For Japanese stocks and Japanese companies, this is definitely a plus. But to be a bit more realistic, originally, Japan promised the United States that it would invest $550 billion. Honestly, this matter is still under negotiation right now. It's still being negotiated, so even though Abe and Trump had pretty good talks, the reality is that the $550 billion is still under discussion. The tariffs are still kept at 15%, unchanged. I just want to tell everyone, since Japan's negotiations went well when it comes to South Korea, today they're also discussing things like national defense and shipbuilding, and it should also be heading in a positive direction. After all, Japan already had these talks, and if the negotiations don't go well, it would be disrespectful and cause a lot of trouble. So Japan's talks should have gone pretty well. So next up is South Korea. At the end of October, it's going to be Trump and Xi Jinping, okay? So I think that right now, Trump and the various Asian countries, whether it's Northeast Asia or Southeast Asia, are still having pretty positive feedback and exchanges. Of course, this is generally positive for the global stock and currency markets. As for whether these talks actually lead to any real progress, I think that's secondary. At the very least, if the talks go well and look good, and both sides shake hands, when you take a photo and put it in the newspaper, it's just the two of them shaking hands and looking happy. No matter if it's with Xi Jinping, with Gao Shi, or with any other head of state, as long as it looks good, the stock market will go up that day anyway. Alright, as for what happens behind the scenes, whether it's $550 billion, $200 billion, or a few hundred billion, how those negotiations go is for later. They'll keep talking it out. At the very least, you need to make a good first impression. Right now, that's the direction things are heading. And tomorrow at 2 a.m., there's still a chance the interest rate decision could mean a rate cut. Right now, the situation seems stronger than those involved, and the pressure is huge. The Fed faces a lot too. It's possible that under Trump's pressure, there could be a quarter-point rate cut tomorrow. Even if not, I think we can expect one in December. Out of the 2 upcoming meetings, there will probably be at least 1 rate cut. The 10-year Treasury yield dropped to 3.98%, and the terminal rate is 3.63%, both trending downward. As yields fall, bond prices rise. Expected rate cuts remain about 1.8 to 1.9 times, unchanged. The US dollar index rose 0.29% today, still fluctuating near the 50-day moving average. The market is still in a period of consolidation and fluctuation. As for geopolitical risks, honestly, it's the same old story. The impact really isn't that significant. For example, between Israel and Hamas, there were some sporadic clashes again today. Basically, Israel accused Hamas of violating the ceasefire agreement, so Israel responded with airstrikes on Gaza. After Hamas was bombed, they claimed they hadn't violated the agreement, so basically each side is sticking to their own story. Now they're starting to delay the transfer of hostages remains. At this point, the US stepped in and said the ceasefire agreement is still effective. So everyone is just arguing their own case, who's actually right. It's like waiting for Trump to come out and judge. But overall, the ceasefire agreement is still in effect for now. Geopolitical risks are still cooling off, and these minor skirmishes are still within a controllable range. So overall, I think crude oil prices are still leaning toward the bearish side. As for gold prices, gold has recently been more about rising and then pulling back for corrections. Yesterday, we spent some time answering questions about gold for everyone. For example, the day before yesterday, there was a student named Liao Yusi who asked about it. That student asked about gold, so we told everyone that if it drops from 4,300 and breaks below the monthly moving average, you need to be a bit cautious. Because once it falls below the monthly moving average, the next step is to move closer to the quarterly moving average or the 50-day moving average. If you pull up the chart and take a look, you'll see where the quarterly and monthly moving averages are. I remember the quarterly moving average is currently around $3,700. Today, Citibank also commented. Citibank said that it estimates the price of gold in the next 3 months will drop from the previous forecast of $4,000 to $3,800, and silver will drop to $42. So just take this as a reference and for your information. Alright, for economic data, today's numbers aren't that significant. But tomorrow is. Early tomorrow, Powell will give a speech. Also, the Bank of Japan will announce its interest rate decision. In the evening, third-quarter GDP figures will be released for both Europe and the US. Also, the European Central Bank's interest rate decision will be announced tomorrow as well. So tomorrow, the interest rate decisions from the central banks of Europe, the US, and Japan will all be released together. Now, you might ask, Teacher, is the Canadian interest rate important? It's not important. That's why, for today's 9:45 Canadian interest rate announcement, I didn't even bother to remind everyone, because honestly, it's not very significant and doesn't really impact the market. The world's attention is on tomorrow at 2 a.m. for the Fed's interest rate decision. For earnings reports, I'll cover those soon, like Boeing. Now, back to the industry side. Let me check some student questions. The CNN Fear and Greed Index, or Panic Index, is still in the fear zone. It's staying there because people are worried about uncertainties. They're concerned there could be a sudden change. Like before the meeting, they might announce they're not discussing it. That's possible. Just showing everyone the current situation. Personally, I think that's unlikely. The chances are probably low. Alright. Who is this? Edison, right? Edison I7581 asked, Teacher, could you analyze from a Taiwanese perspective whether it's better to buy or rent a house right now? If it's the former, how many years of mortgage would you be willing to take on? If it's the latter, are you okay with always paying rent, enjoying the freedom to move, but in the end, not owning any property when you get old? Alright, for this question, I think it's really a matter of personal perspective. Is it better to buy or rent a house? I don't think there's a definite answer. It really depends. When I was younger, I always thought renting was fine. Renting gives you freedom, there's no mortgage pressure, and you don't need to prepare a down payment. So I just kept renting, and actually, I rented for more than 10 years. I spent about 15 years renting places. When you rent, in the end, all your rent goes to the landlord. Even though the rent is relatively low, over more than 10 years, the total you pay the landlord adds up to several million. Later on, as you get older and gain more work experience, maybe your salary will gradually increase too. As your income grows, you start to save some money, and at that point, you might think, hey, I've saved up a sum, maybe enough for a down payment. It was enough to buy a house, so later on, after renting when I was younger, at my current age, I switched to buying a house. Basically, the money I used to pay as rent is now going toward my mortgage. And if one day in the future I sell the house, or if something happens, at least I can use the house for retirement. You can do a property trust with the bank, or use a reverse mortgage to support yourself in retirement. If you sell the house one day, you might get your money back, although real estate prices can fluctuate. There might be ups and downs, but at least the mortgage payments you make are going towards something. When you sell the house, you get back the money from the mortgage, at least you get your principal back. But with rent, even though it might be less, once you pay it, that's it, you can't get it back in the future. And there's another issue, of course, which is something everyone needs to consider for themselves. This is just for your reference. There's a viewpoint that says if you don't buy a house, if you never buy a house, then when you get really old, there might not be any landlords willing to rent to you. Whether this argument holds water or not, I think it's hard to say, because first of all, most of us aren't that old yet. There might not be a place for you to live. Second, the future is actually full of uncertainties. For example, right now there are things like social housing, where some landlords might give their properties to the government to be used as public housing, so in the future, will elderly people really end up with nowhere to live? I actually have my doubts about that. But to be honest, there are some landlords who really don't like renting to elderly people because they're afraid something might happen to them inside, and then the place would be considered a haunted house. This is a very harsh but real issue. No landlord wants to rent to very old tenants. They worry the elderly might not be able to pay rent, or if something happens to them inside, the property becomes stigmatized and hard to sell. So to some extent, I do believe there are landlords who are unwilling to rent to elderly people. So, should older folks start saving up from a young age, just in case? If you can afford to buy a house, maybe saving up to buy one is an option too. Of course, if one day you find yourself unable to afford to buy or even rent a place, then you might have to look for government-subsidized housing to see if there are any new options with lower rent available. So, when it comes to whether it's better to buy or rent a house, I don't think there's an absolutely right or wrong answer. The main thing to consider is your current job stability and financial situation, whether you can afford the mortgage payments for the next 20 years or handle the high housing prices right now. If you can manage that, and maybe your family can help you out a bit, then I think you can consider buying a house, as long as it's within your financial means. You can consider making a real estate purchase plan, but mainly for your own residence. Try to focus on buying a home to live in yourself. If, at this stage, you still can't afford such high housing prices or mortgage payments, I think you shouldn't force yourself. Don't force yourself to think you must buy, or worry you'll end up homeless. It's not that serious, since the future is unpredictable. That's my answer to the earlier question. Caesar, you're welcome, no need to thank me. I hope you learned something in class. About selling when prices rise a lot and buying back when they drop. Yes, that's right. If prices go up a lot, sell some, you don't have to sell everything. No need to sell all, since the trend is still up. Just sell a little if you want. For example, if you sell off 1 or 2 layers, when the price drops, you can buy back 1 or 2 layers. It's basically that kind of idea. But you should always maintain a so-called core position. For instance, since we're in a bull market right now, your core long position should probably be at least 30% to 40%. Don't touch your core position. Whether you're buying ETFs, Taiwan stocks, or anything else, keep your core position. Why? The market is still rising. Keep your swing and trend trades, but for short-term trades, you can do this, sell some when prices are high, and buy some back when they drop. But for those long-term, low-cost swing trades, you shouldn't touch them, because the trend hasn't turned bearish yet. So, for example, if you have some positions in your portfolio that you bought at a relatively low price, just hold on to them and don't do anything. For instance, let's say you bought in at under $90. It's fine not to sell now. For example, at $208, there's no need to sell, just treat it as a retirement fund. For TSMC's ADR, if you bought at $130 or $140, there's still no reason to sell at $300. You might do some short-term trading near $300, buying and selling to profit from price differences. For long-term positions bought at $140, $150, or $160, there's no need to sell. Just keep holding them as long-term investments. Some are for short-term trading to capture price differences, so you need to distinguish between the two. Also, when it comes to position management, remember not to go all in. Don't put your entire portfolio into one trade. It's safer not to go all in. So, this is my response to the questions raised by Caesar and Edison. If you have more questions, feel free to ask. I'll answer as many as I can, and if I can't get to yours today, we'll try tomorrow. For social housing or elderly people living alone, it's hard to rent. This is a social trend, and there's not much we can do, but if housing prices are really high right now, and they are, it's honestly just not possible for some people to buy. There's really nothing you can do about it. If you insist on buying, well, I remember there's a statistic I can share with everyone for reference. It says, if your current mortgage payment, let's talk about principal and interest, whether it's compound interest or paying down the principal, your monthly mortgage payment shouldn't exceed 1/3 of your salary. Many people can't do that now, because their mortgage payments are above that limit. For example, if your monthly salary is $60,000, your mortgage payment shouldn't be over $20,000. But many can't manage that, since with $20,000, you can't even buy a studio. That's just reality. With a $20,000 payment, you might only get a $4 million loan, which might not even buy a bathroom in a studio. That's the situation. So, you might have to force yourself. You could just switch to renting for now, and slowly save up money, just keep saving. Improve your skills, keep saving, and increase your income. That's probably all you can do for the time being. Now, if your mortgage payment is already more than half of your monthly income, like if you're making $60,000 a month, if your monthly mortgage payment is over $30,000 or $40,000, the pressure is actually going to be huge. Your quality of life will be affected, and, you know, everyone gets sick at some point, right? If you get sick or run into some kind of situation, you might end up not being able to pay your mortgage. You can't go to work, right? If you suddenly get sick and can't work, you lose that $60,000 a month. Without it, how will you pay a $30,000 mortgage? You just can't. So, you may have to sell your house. And selling it, just for this. You get desperate, right? You want your money back fast, so you sell recklessly, selling the house, everything, at a low price, dumping it all. Because you want your money back, but honestly, that's a shame. As the saying goes, no matter what investment, stocks, real estate, futures, any product, even funds, you need to assess how much of a financial safety net you have before you decide whether to buy or rent a house. Whether you want to look for public housing or live at home, all of these things need to be considered from every angle. Once you've thought it through, then make your move. I think that's much safer. The same goes for investing, really, the same goes for investing. Alright, let's look at the questions. Do I agree electricity is the new oil? Yes, I do. Lu Gang, yes, I agree. Electricity really is the new oil, because if we look at AI development in the AI industry, a huge amount of computing power is needed, relying on computers. Many companies, like Google, Microsoft, and Altman's OpenAI, are working with nuclear power plants to buy electricity or investing in nuclear energy stocks. Whether investing directly or buying electricity, they're all involved. Because AI computing in the future will be extremely power-hungry, whoever can secure electricity will be able to keep their operations running, and being able to keep running will create more business opportunities and further development. So electricity is a really important thing. But you might ask, as for electricity, will it completely replace things like natural gas or oil? Not really, that's not quite the case. But electricity is definitely very important. Just like you mentioned earlier, electricity is like the new oil, or to put it another way, electricity is a crucial energy-related resource. If we look at energy concept stocks, electricity is a key part. Now, as for how you generate that electricity, it can vary. Some comes from burning natural gas, some from coal. For example, some generate electricity from nuclear power, others from wind or solar. However it's produced, electricity overall is extremely important, so keep that in mind. Today, as soon as we started, we kept answering students' questions and didn't get to our presentation. Actually, this way is pretty relaxing too. Sometimes I think about how every day I have to prepare presentations. Tomorrow, when I get to the office at noon, I'll be preparing until 5 or 6, then get ready and go eat dinner. After dinner, just a little bit. After a short break, I start the live stream. Sometimes I have to prepare a lot of materials because there's just so much news for the next week. If there's a day when I don't have to prepare, and you guys ask questions in the chat, I just start answering them. That actually seems pretty nice, probably a bit more relaxed. But then, once I start answering questions, I end up going until 10 at night, so it actually takes even longer. Speaking of answering, let's take a look at this 3-day Autumn GTC conference. Oh, that one. Someone asked about my thoughts on asset-backed stablecoins. I'll explain this quickly. Right now, when it comes to stablecoins, you can think of them as a kind of alternative currency. Many companies are actually issuing digital currencies, Visa, MasterCard, PayPal, and it seems like Circle is issuing stablecoins too, because they want to create more and more payment channels and reduce the control or fees imposed by middlemen, among other things. So Visa, for example, is issuing or is involved with asset-backed stablecoins. This is a plus for their cash flow, it's a benefit. But will it become fully widespread? That may still take time. That's my answer to Copy's question. Now, for Kobe Brown's question, what was discussed at the 3-day Fall GDC conference? It covered topics like the development of AI, 6G, quantum computing, and robotics. In the end, he mentioned that, in his view, there's currently no bubble in AI. He also shared some data to support this, saying that the reason there's no bubble in AI is because of the current GPUs. He talked about his own GPUs, like the H100 Hopper series, and then the upcoming R series, the Rubin series coming out next year, right? He said that the current demand for these GPUs is very strong. How strong? He gave an example. By the end of next year, the B series, like the B100 and B200, or the GB100 and GB200, along with the Rubin series chips that will be launched in 2026, he said that if you add these two chip series together, the estimated annual sales revenue by the end of next year could reach $500 billion. $500 billion is about 15 trillion new Taiwan dollars, an extremely high number, 5 times higher in both shipment volume and revenue compared to the H series. So his view and outlook is that next year is going to be incredibly good, so everyone doesn't need to worry about a bubble. We've spent a lot of time discussing with everyone, is there a bubble in AI? We even spent an evening on the show talking about whether AI could be a bubble, whether there really is one. If you forgot which day or haven't seen that episode, that's fine, I'll tell you. For now, in the short term, there is no bubble in AI. There's no bubble in the short term, but you need to be careful in the long run. Right now, there's no bubble, so it's just continuous investment, investing repeatedly. But when will a bubble appear? Just remember, a bubble forms the day all this money being thrown in, cash flow, meaning the money coming in, is less than the output for a long time, and then some companies start having cash flow problems. If one particularly important company in the AI industry chain suddenly can't keep up, maybe even goes bankrupt and can't pay its bills or can't get funding anymore, that's when the AI bubble will burst. That's not the case now. NVIDIA invests in OpenAI in AMD, then AMD might invest back in OpenAI. OpenAI buys from Oracle, Oracle buys computing power, and that power gets bought by NVIDIA. It just goes in circles. And Microsoft? It's like they're all strung together like grapes. At this point, everything is connected, almost like a Ponzi or pyramid scheme. People keep buying from each other in a loop. I buy from you, you buy from me, and so on. Is anyone actually making more money? It's hard to say, but the cycle continues and the pie just keeps growing. It really feels like a Ponzi scheme. For now, it still looks fine. AI is booming in tangible products, so there's no bubble yet. It also built 7 supercomputers with the US Department of Energy. Which 2 are AMD's? We discussed AMD's 2 yesterday, right? The largest is a collaboration with Oracle. Today at GDC, they also mentioned many partner companies, calling out several by name. Uber, Eli Lilly, Plenty, and so on, they're all involved, really, all of them. Of course, there's a chance for further collaboration with these companies, and that could help the stock price to some extent. Just letting everyone know that Jensen Huang still believes AI is developing extremely well, especially since their profits are up, so his comments are generally pretty positive. Another interesting point is, he invested in Nokia, $1 billion at $6.01 per share, and now it's already above $8. At that price, he got a 2.9% stake, so he made money right after buying in. What are they developing? They're working on 5G, 6G, software, AI collaborations, many things. Morgan Stanley estimates these major CSPs and cloud companies, there are many. These companies, in 2020, their capital spending was $550 billion, and by 2027, it's expected to reach $630 billion. Estimates keep rising, and as more join, the industry grows. As AI draws investment and spreads, people profit. Everyone's making money, so when will the bubble burst? For now, it hasn't, just wait. Unless someone goes bankrupt, or the last one does, be careful. but that's not happening. Also, as AI keeps attracting investment and spreading, the AI industry benefits. It's becoming more and more stable, gradually moving from the growth stage toward maturity. Once it reaches maturity, when everyone is using AI and it's become completely widespread, the profits won't be at 70% or 80% gross margins anymore. At that point, the money made might just be at regular gross margins. 2 or 3 layers, but we're not at that stage yet. It may still take some time. Judging by the current pace of development, it could take another 2 to 3 years before we reach maturity. Right now, we're still in a serious, rapid growth phase. That's why Nvidia's stock price remains strong. It keeps hitting new highs after each consolidation. Yesterday, it rose 5%. It's still above the 26-day moving average, so if you're holding it, you can continue for now. Just stick to that principle. Take profits at the highs, and if it dips, buy back a little. That's the idea. As long as it's not bearish, there's no need to get greedy. Nokia, everyone knows Nokia, right? Back in my day, it was a major cell phone company. Back then, dumb phones meant button phones. Nokia had many models, like the 3310, 3360, or something starting with 66. They sold like crazy. I used those phones, and so did everyone else. The most famous brands then were Motorola and Nokia. I've used Nokia and Motorola. Motorola had the Little Dolphin model, remember? It was famous. If you know the Little Dolphin, you must be about my age. Back then, the Little Dolphin sold very well. Then there was Motorola. I'm not sure if it was the B3 or another B series, maybe Thamai Ban, which sold well. Nokia, since it didn't handle the mobile phone industry's transition well, was overtaken by Apple and Google and basically wiped out, so it declined. But now, it's making a comeback and even working with Hueda. Whether it can rise again like a phoenix, we'll have to wait and see. Let's keep an eye on it, okay? Nvidia's stock price is still strong. Also, mention Microsoft. Why do people call Microsoft a 10-bagger? Mainly because of OpenAI and its achievements today. The company's restructuring. So what is this restructuring about? After it's done, what happens to its profit-making division? OpenAI is setting up a fund, and there will be a split between the profit-making division and the non-profit division. Now, the profit-making division can hold shares, and the non-profit division can hold up to 26% of the profit-making division's shares. But here's the thing, they need to purchase $250 billion worth of Microsoft's related cloud services. How much can Microsoft hold? Microsoft holds 26% of shares, worth $135 billion. This $135 billion comes from past capital increases, share subscriptions, and similar factors, which set the valuation. OpenAI's market value is about $500 billion. Yes, that much, or about 15 trillion new Taiwan dollars. 500 billion US dollars. If you own 27%, that's 135 billion. People say Microsoft made 10 times its money because it got 27% of OpenAI's shares. Why? Back then, when Microsoft was the biggest investor in OpenAI, putting in almost 14 billion US dollars. So if they got about 27 or 28% of the shares, and with the current valuation being close to 140 billion, that means their 14 billion investment turned into almost 140 billion. That's a huge return, nearly 10 times. Of course, with this kind of transformation, there are definitely some conditions and exchanges involved. First, besides OpenAI needing to spend $25 billion to buy Microsoft's related cloud computing services, Microsoft can also continue to use OpenAI's related models and intellectual property rights, with the usage rights extended until 2032. In addition, from now on, OpenAI can collaborate with other cloud service providers, not just its main shareholder Microsoft. Previously, there were restrictions. They could only work with Microsoft, so any AI products they developed had to be used with Microsoft. Now, OpenAI can work with other companies like Google and Meta. They can all collaborate, and there's no need to get Microsoft's approval anymore. And what about Microsoft? Well, Microsoft is also opening up. Now, Microsoft can collaborate with companies other than OpenAI to develop AI-related platforms. Basically, they can work with anyone relevant. They can work with Google, Gemini, or even xAI under Elon Musk. Any of those collaborations are possible. Even working with Meta is no problem at all. So, After this restructuring, OpenAI can now collaborate with others as well. So now it's open. There's a chance for them to generate more revenue and make more profit. And Microsoft is no longer limited to just working with OpenAI. They can partner with other companies too. So, in a way, I think this is beneficial for both sides. It's a win-win. At the very least, it looks like Microsoft's original $14 billion investment has already yielded more than tenfold returns, which is really impressive. Of course, in the short term, Microsoft's stock price surged during intraday trading yesterday, rising 2%. It's still holding above the monthly and quarterly moving averages, and tomorrow they're also set to announce their earnings report. So when it comes to the earnings report, it should still be quite impressive. Of course, we'll keep tracking this for everyone. But just to say, regarding today's topic, this topic related to OpenAI, I think it's still generally positive for Microsoft, and it's also a good thing for OpenAI. So I just wanted to share some additional industry-related information with everyone today. And finally, let me mention Boeing. Oh, it's unbreakable. Like those Nokia phones, they're unbreakable, which makes them useful. Caesar asked if it's still possible to add positions in Nvidia, Tesla, or AMD now, since prices haven't dropped. With so many stocks, let me tell you, no matter which company you mean, just remember one thing. You can invest more or build your position, but only if you wait for a pullback. When the price nears the 20, 10, or quarterly moving averages, remember 12, 15, 10, 12, 15, those averages, wait for the price to touch those lines before buying more. It doesn't matter if you're trading short-term with the 60-minute or hourly chart, or investing mid to long-term with daily or weekly K-line charts. It's the same, so that's how I'd answer Caesar. These stocks, Nvidia, Tesla, Micron, AMD, are all bullish. When prices are high, take profits. When near moving averages, look for buying chances. What to do? Buy after clearing your position. Don't go all in. If you avoid that, it's fine. Now, let's preview Palantir's earnings report, since it's out tonight. For revenue, Bloomberg's latest third quarter estimate is $22.2 billion, up 25% year over year. The next quarter forecast is $22.6 billion, a huge 50% year over year growth. The full year estimate is $86.9 billion, with an annual growth rate of 31%. Ever since Boeing's 737 MAX and this aircraft were once again cleared by the U.S. transportation authorities for production, allowing them to freely manufacture, I remember the monthly output increased from 35 planes to 42. This kind of increase will, of course, gradually help their revenue, profits, and cash flow. So everyone says it's very important to see whether Boeing's earnings report tonight will meet or fall short of expectations. So remember, the revenue part is $22.2 billion, with an annual growth of 25%, and the full year estimate is $87 billion. Annual growth is 31%. As for EPS, the profit this quarter might still be negative, because last year planes couldn't fly, couldn't be produced, and a lot of aircraft were grounded. Some countries didn't want to buy Boeing planes either. Why? Because of crash incidents and quality issues, which made everything extremely risky. There's just too much to list. Honestly, all the problems Boeing had from last year to this year are just endless, so they've been losing money all the way, loss after loss, just continuous losses. In Boeing's financial report, note this, third quarter EPS is minus $4.44, which isn't too bad. Why? Because last year in the same period, they lost $10. Last year, they lost $10 in this quarter, but this year, the loss is estimated to narrow to $4.44. The full year estimate is a loss of $6. Oh, last year the loss was $20. Last year they lost $20, and this year the full year estimate is a loss of $6.20. So just keep this data in mind. If they release their financial report tonight and the revenue or profit is better than expected, then Boeing's stock price might still have a chance to rebound a bit. I still think the bigger issue is quality. Whether they can really get quality control right is a big question. Certification of the aircraft is also very important. Revenue is one thing, quality control is another, and financial reports are their own thing too. All these aspects need to be closely watched. That's a preview and some extra info on Boeing's financial report. The 12-month target price set by foreign investment institutions is $258, or that's the estimate from foreign analysts for your reference. In the U.S. pre-market session, companies up are Teradyne and Syngent. Teradyne up 20%, Synchent up 10%, mainly as earnings beat expectations, acting as a positive catalyst. Nvidia rose pre-market, up 3.6% to about $208. Foxconn and Micron rose 3%. AMD up 2.88% to $53. On the downside, Generac Holdings dropped 16% in pre-market trading, also due to earnings falling short of expectations. International Paper fell 5%. Additionally, companies like Kraft Heinz and United Health also dropped between 1 and 2% in pre-market trading. Overall, in the U.S. stock market, major tech stocks are still leading and remain a priority. In your proxy, the U.S. stock market remains positive. In pre-market trading, major tech companies are still rising. The U.S. stock market should continue trending up and close higher today. The Dow Jones Index rose slightly by 0.3% yesterday, staying above the monthly and quarterly moving averages. The Philadelphia Semiconductor Index remains strong. For the Magnificent 7 Index, pay special attention, as earnings reports in the next 2 days are closely linked to these 7 giants. Yesterday, it rose 1.27% and still shows a bullish structure, which is leading the U.S. stock market. Continuing to move forward on the bullish side. As always, manage positions, take profits when prices are high, and when low, have the courage to buy dips and trade. At this stage, spread trading remains the safer approach. That's all for today's cycle content, bringing you the latest updates before the U.S. market opens. After class, like, subscribe and share. Wishing everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.